Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and also consider other important aspects of working for yourself, being self-employed, running a small business. So as part of our bite-sized series of QuickBooks demos, I'm going to today show you how to raise a credit note in your QuickBooks software. Before I do that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as being able to find other information that we have on a whole host of different topics, all aimed at supporting you in your self-employment. And if you navigate to the playlist section of our YouTube channel and look for the QuickBooks playlist, you will be able to find the rest of our bite-sized series of demos available for you. So back then to credit notes. So as you will know, there will be some times where we need to make changes to an invoice that we have raised for a customer or client. As you will know, when we raise a sales invoice to our customer, what we are doing in terms of our accounts is adding the sale to the profit and loss. If we're VAT registered, we're accounting for the VAT element in our VAT control and subsequently for our VAT return. And also we're adding the amount owed by the customer to the individual customer account. So those are the things that we are achieving by raising an invoice. But there may be times where for one reason or another, we need to make an adjustment to that. Perhaps that we have issued an invoice in error, or we've overcharged, or we've agreed a discount as a gesture of goodwill. Lots and lots of different reasons that may require the amount that the customer has been invoiced to be altered. Now, once a sales invoice has been issued, so by that I mean presented to the customer or client in paper form or email to your customer or client, then it's important that you don't make any fundamental changes to that invoice. And what I mean by fundamental changes is don't change any of the amounts or the dates. If you needed to just maybe amend something on the description, a typo or something like that, that would be fine, but we shouldn't be editing invoices that have been issued. And the reason for this is that if we just go ahead and edit invoices, then our records won't match the records of our customers. So, for example, if you have a customer who is a VAT registered business themselves, and we just have edited an invoice after we have issued it to them, then they've got a different document than is in our records. And there's no audit trail to show why that has happened. So once that invoice has been issued, if you need to edit it in any way, then we need to use a credit note to do that. Now, sometimes we may do a credit note for part of the invoice. For example, if you've negotiated a partial discount of a gesture of goodwill, you may just issue the credit note for that amount. Or it may be easier for you to issue a credit note for the whole of that invoice, therefore completely reversing out everything that the invoice did and then raising a new invoice. But in any case, as you can see, then we've still got that original invoice in our records. We've then got the credit note and potentially any new invoice. So there you can see that we have a comprehensive audit trail that if you needed to, in the event of an inspection by HMRC, for example, you can show exactly what has happened, that you invoiced this amount, that you credited against it, or you credited in full and then re-raised. And so therefore that means that your records will exactly match the records of your customer, and you don't have records out there that don't match your own records. So that's why it's important to use a credit note when it's required. And as I mentioned already, but it is really important once an invoice is issued that you don't edit fundamental detail in there. So I'm going to pop into the software now and show you how to actually raise the credit note. So here we are on the demo software. Now, as you can see, raising a credit note isn't one of the quick actions available. So to raise the credit note, we'll go to our new icon on the top left-hand side, and under the customer menu, we're going to select credit note. So what I've realized is that one of my customers, I have made an error on one of their invoices, and I've invoiced them for 2 items instead of 1. So I'm going to simply fill the screens in exactly the same as we did when we did the original invoice. And the same invoice numbering and the credit numbering. QuickBooks will do that for you, so there shouldn't be any need to amend the number that it's presented with. The credit note, of course, will be the date that you're doing the credit, not necessarily the date of the original invoice. So in this scenario, it is a sale, and so in the description here, I'm just going to put something that indicates to the customer why they're receiving this. So I'm going to offset duplicate charge, or you may put on invoice. You may have an invoice number that you want to refer to. You may put, if you're crediting the full invoice, you may just be type to credit invoice. That description, the same as for the invoices, for your purpose, for the benefit of you and your customers. So you should put enough information that you know what that means if your customer queries it, and that your customer hopefully has enough information that they don't need to query it. So the first time I invoiced them for 2 at 50, and I want to credit one of those items, and the VAT should be exactly the same. So if you think about what we're achieving is, so when the invoice was generated initially in the accounts, that added to the profit and loss, registered the VAT if applicable, and added the balance to the customer account. Now the credit note offsets that, so the amount of the credit takes that amount back out of the sales for the profit and loss. It reduces the VAT accordingly and reduces your customer balance. So it is really important that you use the same products and VAT initially, unless there's a particular reason for a different product, for example. So for example, if it's a bad debt, which we have covered previously, you may want to have a product service for bad debt, so that it's showing separately on your P&L. You may not just want it to reduce the sale, but ordinarily we would look to be replicating the information that was on the previous invoice that we generated, that we're crediting towards. And exactly the same as with the sales invoice, we can preview that to see how that's going to look. And then if we want to, that we could print that. And then the same, again, as the invoice, you've got the same options on the drop down next to your save and close button. You can save and new, or save and send if you want to email that straight to your customer. I'm just going to save that. And then what I'm going to show you is if I just pop into the customer account. And you can see how that has, if I go into their transactions, so you can see this invoice here. So we've got the £220 invoices, and now we've got a minus of a £60. So by doing that, we have reduced our sales by £50, reduced our VAT sales tax by £10, and we've reduced the customer account balance by £60. So hopefully this helps you to understand how to raise the credit note in your QuickBooks software, how to be able to do that, and the reasons and the times when you might need to do that. So thank you again for watching, and if you haven't already, please do subscribe to the channel. Thank you. Goodbye.